Good morning, everyone. It's Wednesday. It's hump day. Let's do this. We're going to start with the analysis of a few things just to get the feel across the board. So let's start with crude oil, seeing how we do have the crude oil inventories today. All right, let's change to a very large time frame just to get that bird's eye view. Now, yesterday we really attempted to move away from the demand area that is on the daily chart and also visible on the weekly chart too. But it kind of didn't hold into the end of the day, right? There was a big failed auction that I managed to catch yesterday for what I like to call post on my card. That's like 3 p.m. my time, which is... I always get my time zones mixed up. So 3 p.m. my time, that will be 9 a.m. Central. There we go. So we're going to see whether the same thing happens today during London. Right now, when I look at the London shortened value area from yesterday, we're kind of opening inside of it, trying to dip below it, and then responsive players have brought it back up. Now, responsive activity is known as market maker activity. So whether they're going to take it much higher up like we saw yesterday, that remains to be seen. But there's definitely a possibility of this reversal. If I reference the NFP from last week, we're quite a bit below that. So NFP from last week was, it had a range from 76.29 all the way up to 76.69. That was a half an hour after the NFP release. So, is there a chance that we reach that? Probably not today. But maybe towards the end of the week if we do get that reversal. If the assumption that we are going to reverse yet again from the same demand area on a large time frame is correct. Let's have a look at the 30-minute chart. When I look at the volume profile, this is all a high volume node. So there is a possibility that we kind of just drift in between the high and a low point pretty much until the inventories. And then we're going to see what the inventories bring. Recently, it's been like, I'm talking like last couple of weeks, it has given us movement. So that's kind of an anomaly, because usually with the inventories you have a lot of sort of up and down, and then a whole bunch of nothing, and then the next day you will get that move that's a result of the inventories sentiment. So I think I'm going to take it pretty slow and steady today. Now equities, they popped below the initial balance this morning. Not a terribly large day just yet. I suppose NQ did have about 158 ticks of range, which for NQ is pretty low. We're looking at the average session ranges for London at 827 for NQ, and New York has whopping 1,266 ticks inside it as just the average, which is insane. But there are signs that they might be going into a short trend, and I can see that I actually have a DAX setup that looks pretty good. It's kind of knocking on the value area low and reversing, so that could be a trade for me. The UX products are planned for November the 1st. So I did look for posts. So here we go. UX planned ETA November the 1st, 2024. So we'll see if we get that. It would be good to get it this year, I suppose, because that will make things a little bit easier during London, since we do have DAX is its main session. It's its main session, so it makes sense that we should have that for London. But we'll see how far they got to. All right, so let's have a look at ES now. Same thing. We're going to go up to very, very big time frames, starting with the weekly. On the weekly chart, we are reaching a previous sell-off area, which is a pretty nice looking area for shorts. However, this being an equity index, I always take it with a pinch of salt because equities just keep shooting up and up. We did have a very, very crazy recovery. So we're going to see how that plays out. Now let's drop down to the daily chart. Yeah, similar outlook. So we're sitting at the top quartile, top Q point, as I like to call them, of the observable move. And yesterday we had that red candle, which wasn't massive, but this could be the start of a 3-bar reversal, which would open up the possibility for more shorts. So I'm going to kind of stay open to both sides of the story today on equities. But mainly I will take on the lower time frames and the day time frame as a more immediate bias and entry. But I will definitely be creating 4 hypos to account for both sides of the story. All right, let's have a look at gold now. Gold is at all-time highs, starting to distribute a little bit, although still not building that much volume. The area that I have marked here is the previous high that was already reactive about 3 days ago. So that's something to look out for, either for continued upside or perhaps to look for a breakdown of that area if we're going to have any more serious sell-off. But right now, this is in range on a daily chart, and it's given us a pretty wide range. But yeah, I'm not really expecting too much from gold until we make a decision of whether we're going to go higher or not. And with that in mind, I am just going to have a look at the profiles. So we are currently below the Tokyo range, which again could be a bearish signal, but we could also turn around. There was a failed auction. We're sitting below the value area, and that can be bearish. So if I go to the 30-minute chart, London value low is 25.53. So I'm going to try and put a line. Okay. So 25.53.1 to be super precise. Then we have value high at 25.65.1. Okay, so that's the value area from yesterday's shortened London. I cut off my value areas at COMEX beginning, which is 1:30 p.m. my time. So for now, it is trying to go lower, but slowing down. We are building structure in this lower part. So the initial balance in gold was, let's get a rectangle, was this. And we popped just outside of that. Just outside of that, and then promptly move back into it. But it is not the strongest reversal pattern, so this is not really something that I would immediately jump on unless we start to really catch a bid to go higher up. So for now, nothing to see here. Let's move along to NQ. Ton of NQ traders. I'm not a core NQ trader. I'm not a big fan of it. So similar picture there. You know, we're sitting right below the Tokyo range with a pretty big gap from London. So London value all the way up at value low 198.62. These are just London levels, guys. They are not, usually not that valid for the New York session because the New York session has its own value. And then the top of that is 198.99. That's a number. There we go. So we're pretty far out. There is a possibility. There is a possibility that we go into a gap fill at some point today. And then to start sort of hanging around the value area. Now, for me, I want to see very, very strong orientation points. So anything that kind of happens in between, I'm not really interested in that. Unless I'm at average daily or session ranges, value areas, and, you know, we might have a strong possibility of a clean gap fill. So not a gap that has been smashed to the opposite side of the range. Those tend to be lower probability trades unless the value area is somewhere close by. So I typically like to miss out on the first major move intentionally because it then gives me more structure and more orientation for further moves into some later parts of the day. And every time I try and step away from that approach, it's just not, I don't get consistent results. So we need to be patient here. Like I said, it is hump day. If you've had profits for the week, you need to save those rather than do more trading and more trading and more trading. So you need to be a little bit more mindful about the accounting side of profits and trying to trying to derail your profits, especially heading into sort of the end of the month, right? All right, Coach Hoop says, hello, Dee. Storm rolling through here. Okay, hopefully you're safe. In Arizona, dog's a little anxious, so thought I would pop in. Oh, that's nice. Thank you. My question, with all your experience in crude, do you think now that the roll is over and October crude is front, trade will be cleaner today? Well, we should hope so, but let's not forget that we have the inventories, I think, today. And that tends to mean pretty quiet until we actually get the inventories. So yeah, that's happening at 3:30 p.m. my time, which is 9:30 a.m. Central. We have the Fed minutes today. It's not the rate decision, but it is the minutes. So I don't know. I mean, I'm guessing we're going to maybe have a bit of a muted day again today. I mean, anything can happen. Obviously, things can change within a blink of an eye. But if I'm looking at the previous days of how these sorts of things have played out, especially in crude oil, we have August and we have, yes, the new contract. So there is a chance that we turn around from the demand and then go into a nice clean trend. But crude oil is never clean, right? Crude oil is very technical, but it loves to do whipsaws intraday. It loves it. This is one of the reasons why scaling into crude oil trending trades has never really worked for me, because, you know, you get crude oil typically moves in about ranges of about 40 ticks up and down. Sometimes that expands to about 60 or 70, but all this year, you know, from mid-February onwards, it's literally been sort of 30 ticks up, 30 ticks down, maybe a little bit of an extension, 70 ticks in like very choppy direction, and then back down 30, 40 ticks. So it never really, very rarely will it have those like zombie rallies like we see on equities. It's just not that type of a trade. Even when we have that, when you have a move up, it's more likely to look like passive buying. And if we have huge sells, we have the same thing. It kind of sells off, then kind of pulls back up, then sells off. And that makes obviously things very difficult for people. And this is why crude oil is considered pretty difficult to trade, because they're like, well, momentums are not working. Well, they are working, but you just need to kind of adjust for the craziness, a special kind of craziness that crude oil brings into the mix. So even yesterday, like we had a failed auction around about here. This is the move that I caught. And then we had the standard sort of choppy euro close that did go up into about 30 ticks. And I actually had a very good day yesterday. I'm still kind of focusing on combines because I think this time of the year is a little bit tricky to trade. And if I wasn't doing Topstep, I'm kind of on a sort of half break. But if I wasn't doing Topstep, I actually take the last 2 weeks of August completely off. I just go to Spain or somewhere, or go visit my mom. But this year it's a little bit difficult because we're doing like property stuff, and I just haven't been able to like sort out my schedules with flights and everything that will work for me. So here I am. But yeah, that does mean that I'm going to be focusing more on my combines. And so I did catch this big move down and then missed out on this because this was for me an anomaly, and waited to see what actually happened from that rally-based rally that we actually witnessed during London, that I actually got run over, smacked in the face for minus 800 yesterday, trying to chase more downside. And, that was still the right decision, because at the time, the only thing I had was a pretty nice uptrend. Yes, it visited to the demand area, but then again, this was a huge pop that to me was not very playable. The price kind of ran straight through most of the initial balance range, and usually I don't really get involved in the directional moves once we're at the top of the range. So the only way I could get involved is only when we get outside to the other side and then get single prints, which indicates that we do have like a very large movement. But then we kind of hit the overlap, and I don't trade the overlap. I literally sit it out, because I've never been able to, not on crude oil anyway, I've never been able to find a statistical advantage that I can repeat over and over during the overlap. It seems to be very random. And typically I don't have any good levels. And even when there are good levels, they tend to be very sketchy, unless it's like an average session range reversal. Now, we had a slight reversal yesterday from this candle. That was actually the average session range, but it was so small. So I did try a little short. I don't think I got much out of it. I think I got like 3 ticks, and then I was like, okay, this is the overlap. I don't want it. And I waited for my high probability setup, posted my cart. We failed the auction, and then I waited for some more weakness, and then it just smashed through. So that was awesome. Then I sat on my hands for about half an hour, and then we got the euro close. Very choppy, very choppy. But I did manage to grab about 33 ticks out of it. So it went a little bit more, but that was all I managed to catch. And then I actually went on to gold. Also managed to catch a gold rally from the lunchtime in New York all the way into the close. So that was another 52 ticks. Tried another long ES trade towards the end of the day. Didn't go anywhere. Ended up scratched. So that's all my trades for yesterday. I kind of felt that crude oil is coming back into a more kind of normal behavior, right? With some movement where you have, 2 or 3 very good sort of push momentum trades, and then a couple of little scalpy, counter trend moves. That's the kind of stuff that I look for in crude oil. Whenever we don't have movement, I then don't have that one big trade that accounts for a lot of the profit on the day. And then when it gets stuck in like a 10 tick range and goes absolutely nowhere, that's obviously a problem, because I'm just like, well, okay, well, now what? And, I usually like to do anywhere from 3 up to 5 trades per day. on various products. But typically, if you know how I trade, I like to break apart my day. So I don't sit here for 12 hours. You know, today I'm going to be on fast markets, so I'm not going to be sitting here from now all the way up to 2:30 p.m. and then all the way up to 5 p.m. because that's going to exhaust my mental capital. So I obviously have to move away from the charts and only look for the setups around the levels that I want to see and the levels that will come in at the right time of day. If any of that kind of starts falling apart, obviously that's an anomalous day and I try to stay out as best as I can. But yeah, trade might be cleaner today. However, I would expect it to be more cleaner. Is that a word? Tomorrow, right? So after the inventories do their, their shakeouts and whipsaws and storm in a teacup. And, we might get into a momentum trade at some point today. But yeah, I wouldn't. Yeah, statistically, it's just lower probability. So I never really expect very good days on inventories. And that's why I'm always skeptical to go into the inventories trades. Because I'm like, well, what? How it's really, and then only if I see like single prints or something, I will try and jump in. And, as I like to say, point, click, and pray, because that's the only thing you can do at that point, just that it goes your way like pretty much now. Otherwise, there's no trade. So yeah, we'll see. Coach Hoop, we're gonna see, but I'm not super hopeful that we're gonna have a cleaner trade. Having said that, yesterday to me, especially for that NYMEX session, that was a very normal move. That is what I want to see. Okay, so nothing here to see. Let me just kind of scan through because I'm kind of stalking my DAX short here if I can get it, but it's still not really reversing. We have some selling wicks, but I still need to see a committed reversal on a slightly larger time frame. So 30 minutes, 15 minutes. I don't have that now. But yeah, it's definitely looking decent if you are watching DAX. All right, Dickie Cleary says, D, what is your normal take profit range in oil? Yesterday I was short from 91 and it bounced off 50s twice. Eventually bought 82s and back, but my target was 10. Yeah, 80 ticks I think is too much because if I look at the average session range in crude oil, we have barely 157 ticks for the entire session. So if you're aiming, like I typically like to aim for about 30 to 40% of the average session range. But to be honest, in some parts of the year, like August, even that might be tricky unless you're like really good with the trade locations. And if you're looking for momentums and you're not, like let me just see. So you said you were chasing 80 and yeah, so you were chasing, over 50% of that move intraday, and that's difficult. That means you have to pretty much catch it towards the lower high of the day, plus minus about 20-30 ticks, and to account for stop loss size and everything. 80 ticks right now would be a little bit tough. The only time you might snipe for 80 ticks is if we have a neutral day with a pretty nice big range of over 150 for the day, not just overall session range, but for the day. And a lot of the days, you have 105, barely. Recently, we have increased the average session range over the last sort of couple of weeks, but for absolute months, we were sitting at 115, 120. So to shoot for an 80 tick profit target, that could be something that you get on a trending day. And only if you catch it like really early, right? So I would say 35 to 45 ticks would be a realistic target in crude oil. If you get 70, that's like a home run trade. I've got hairs everywhere. That's what happens when you have 8 dogs. You just have hair. Yeah, so 80 ticks in current ranges, slightly too much. So if I am working with 157 tick range as an average for the session that I'm looking at, 30% out of that would be about 47 ticks. But to be safe, I aim for 40 to 45, and then if I manage to get a really good day where we're just kind of shooting up or down, maybe you have a possibility to catch 70 ticks. But 80 ticks, that's going to be very rare. All right, let's have a look what's going on. Do I often look into gold? Yes, gold is one of my main products. So if I take in sort of the last 7 years of my career, I have traded crude oil as my main product and done the best numbers-wise in crude oil. But then gold is my second. It's like very, very close in stats with gold and crude oil. So I would say, a more commodities trader. Well, I am a commodities trader more than I do in equities, even though in equities I do okay. But I tend to trade them for power hour. That's like my prime time to trade equities. I dislike trading them outside of that. First of all, because my main instruments are moving usually. And second of all, because I find that statistically they don't have the same sort of structure as crude oil. And I suppose, I'm not an obsessive person by any means when it comes to anything apart from my skills. So I am obsessive with my skill sets, but not obsessive in my day-to-day life, if that makes sense. Like, I come from an artistic background. I was a musician for 20 years before I turned to trading professionally. And, I did that for many years. So I was your typical sort of messy artist, don't care about anything around in my environment. I just, would get up, practice instruments. That's all that existed for me. And I took the same thing into trading. So what I look for in trading is that structure. To have specific parts of the day when we have clear expected movements. And the only statistical relevance that I was able to find in equities was towards the end of the day when the bond markets close and we get an extra influx of volume. That lends itself to some fairly similar setups that we can take advantage of. Then obviously we have the MOC imbalance in the last 10 minutes of messiness. But that can actually be a short squeeze, long squeeze. It can actually be a pretty fun time of the day to trade for me. And I've had great success doing things like that. London for me is actually a DAX trade, which we don't have right now. So I haven't actually traded much else. Since I stopped doing Forex in 2012, I haven't really traded much else apart from DAX for a very, very long time. Like, we're talking years now, absolute years. So yeah, this is, it's been an interesting thing, but at the end of the day, I still want to focus on the things that are moving. So I do look into gold very frequently. It is almost permanently on my tradable instruments lists, but I like to trade it for post and white cut, which is post 3 p.m. my time, post 9 a.m. Central, because there's certain mechanistic things that happen around option expiries in Forex, and these two are Forex-linked instruments. So just like you have the gamma walls in equities, there's something similar happening in Canadian dollar and Australian dollar, respectively, whether we're looking at crude oil or gold, because those two are countries with some of the greatest exports of those two commodities. And whenever there's a large option expiry, again similar to large option chains and option walls, it can bring a reversal in price, which is why you see some of these big reversals. This was a result of one of those yesterday in crude oil. But we haven't seen such violent moves for post and white cut for a while now, literally since middle February. So I'm glad to see that's back. Okay, follow-up question, Cody H. Do you just have more experience with crude and therefore stick to your comfort zone? Well, I've just answered that question. So I have equal amount of experience in gold and crude oil. I just prefer crude oil for most years. Not this year, I'll be honest. It has been very tough cookie to crack because of the lack of movement. So I think this is due to the election year and general geopolitical risks in the Middle East where they didn't know what to do with it. And typically, crude oil would be a risk product. So anytime there's any sort of risk, any sort of threat of supply or increased demand, it would go on these really nice runs and give us anywhere from 220 up to 300 ticks on average. And this has been years and years and years. And then we get to 2024 and we're working with 76 ticks 3 hours into the session. And I'm like, okay, interesting. So I've kind of tried to hop around different products. It's not been an easy year. Then this is a part of trading. I struggled on the election year when Trump was elected as well. So like I said before, maybe there's something to that. The fact that maybe the markets are just waiting for the outcome. And there is movement, they are moving. It's just on a day time frame level. When you're looking at how the markets move for a particular time zone. So if I'm looking at 90 minutes and I'm expecting to see at least 150 ticks, to then get like 60 or 70 and, some days 30 and 40, that's absolutely atrocious. So for me, that's been very challenging this year. And I have turned to gold more this year because gold is still at 200 and whatever we have now, let me find the gold chart, 282 ticks for the COMEX session. That's a great range, right? But that also means that you have to expand your stop losses a little bit. So I'm kind of using anywhere from 35 up to about 55 ticks because we have the range. I try to use 35 ticks any way I can, but sometimes that's not always possible. Yesterday's trade was done on a 35 tick stop and I managed to get about 52 ticks out of it. So that's a pretty decent risk reward. Not quite 2R, but pretty close. Definitely statistically viable. So gold, definitely on my tradable instruments. But given how challenging this year has been, I am trying not to do too much trading in the live account because, I have been struggling. So I've been focusing more on my combines and focusing more on DAX on my private account, which is my bread and butter. So that's very important to me. And just carrying through day by day, not trying to overtrade. The biggest problem with years when you're not finding things that you want to see in the market day after day after day, and then it kind of continues, is just to not lose it completely mentally, right? That's the main thing. So, you need to do time away from screens, I would say, is the most important thing. Getting locked in, just going, I'm going to find a trade. It's like, you're not going to find a trade. Just walk away. So I have been not that active in the live account recently because of that. I'm still involved in combines, but I'm trying to give myself time in the day to kind of just not sit here and go, let's look at platinum, let's look at copper, let's look at this, let's look at that, let's look at that. Out of, the need to kind of, try and find some setups. So I've just decided to take it easy, take some time away from the charts whenever I can. So I typically do the London session. I try to find my DAX trade. Sometimes I find it, sometimes I don't. And then I have a break of about 2-3 hours. And then again, I would come back for post on my card. If I don't see anything obvious, I will walk away. And then again, go walk my dogs, go do something else. That's something you need to do as a trader. You need to be able to step away and sometimes even to completely step away from the charts altogether, just to kind of reset. But yeah, I do look at gold, I do look at crude oil, and right now gold is actually leading when it comes to favorite products. And obviously looking at performance as well. So yeah. Please, can you explain the daily process of approaching or looking at the chart? Well, I have my own process that I've taught to many traders. I like to start from the daily and weekly and sometimes even monthly, depending on what we're looking at. So let's start from the monthly chart, because sometimes you can find some clues that may not be immediately obvious. Oh, of course, this is not. Do we have continuous contracts here? Because I want to stay focused on. Okay, that's going to be a bit of a challenge to look at, because that's not a continuous contract. Never mind. Let's go to the weekly chart, because that looks all right. When I look at the weekly chart, the first thing is to identify good areas of tops and bottoms. And I use the concept called supply and demand trading, which looks at a number of things. Now, I have like whole courses explaining that, because otherwise, if I'm going to go into the explanation of the 6 conditions that you need to have in order to qualify a zone, blah, 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 we're going to be here not for an hour, not for 40 minutes. We're going to be here for the next sort of 20 hours because there are lots of little things, bits and pieces that go into qualifying a zone as a good area for any kind of reversals or zones of interest. And these are big zones, so we're not going to be taking trades from them, but they're very good to be aware of, because right now I know that I'm arriving in an area of a demand, which means further sells might be a little bit tricky. So maybe not sell directly into the zone unless the zone starts really breaking down and we start penetrating deeper into it. Otherwise, we're looking for reversals. So one thing that I can see here is that we had a top up there. So all the way up, crude oil 87 was the top. Then we have a pretty decent looking supply that started with a drop-based drop and moved away and stayed away a pretty decent amount of time before it reversed, hitting a demand level. And then we kind of arrive into that drop-based drop area. Then we create another reactionary, I call them, this is like now getting into my methodology, offspring zones. Offspring zones. Zones that hit the previous supply and then create a reaction from it. So that's exactly what happened here. So that's a zone of interest as well. Even though offspring zones are not nearly as reactive as the parental zones, because sometimes the price pops into it, reverses, and then carries on higher into it to reach the originating zone, they're still very good for intraday trading, because that little reaction, once we run into an overhead supply, can be a very good chart location to look for some good opportunities intraday that might last you a couple of hours, or maybe even 3 or 4. Okay, so now looking at the day time frame. Now, similar outlook. I keep the big zones still shaded, but now I can see we have another zone which is in the middle, and that weakens its relevance quite a bit. So this is the zone in the middle. And on my charting thing, I have my Blatek KSD indicator that does all this automatically for me, so I don't have to look at anything. So here we have a middle zone that also could offer some intraday opportunities, but caution with it because it is in the middle of the entire swing. So we're not at the top, we're not at the bottom, we're in the middle. And again, that tends to weaken things. Once I've done that sort of analysis, I will typically go down to the day time frame. And sometimes I look at the volume profiles on the big zones, but they largely match up with their larger time frame supply and demand zones. Like, very rarely did I see something that doesn't match up, because when you start distributing, you're effectively building volume in a zone. That's what creates the high volume nodes, and then when you move away from it, that's what creates the low volume nodes. So it's like, it's the same piece of information, just on a slightly different time frame. Now, when we get into the day time frame, I look at the value area and how we're opening. So rather than going, I'm just looking at these things, they're going long, I want to know if we're inside yesterday's value or not. And yesterday's value was around this same area here. So nothing's changed. We're still in a very similar zone. And in fact, this is why I'm reluctant to run anything else apart from a range trade if I can get it. So just looking at tops and bottoms, maybe I would be more inclined to run longs from the bottom of the area, primarily because it is an inside day, so we're inside balance, inside day, that's what it means. And that means I need to focus on the extremes of the ranges and pretty much anticipate a range-bound day. Now, that's one hypo. Second hypothesis that I usually have on range-bound days is that we're going to have a breakaway. And in that case, I need to see a very, very strong move away that typically leaves single prints to one side of the profile. If you're looking at ICT concepts, they call it the displacement, which is actually a pretty good word for it. The displacement. But we call it single prints in profile. So it's been a concept that's been around for like many years. It's been around since I was like 6 years old, 1986. When the first book about market profile came out. But, all of these kind of smart money concepts, they look at the very similar things. Failed auction, I think they call that the manipulation or something. It's just interesting to see how many different concepts have, effectively the same price events described inside it. But yeah, so the point of the profile is first and foremost to give us an open sentiment. Actually, let's do a little thing here with mind maps. So it's all very well to talk about things, right? But mind maps are a great way to stop messing around with concepts inside your head and to actually conceptualize things outside of your head, and then to have a visual aid that you can easily follow along. So if we're talking about multi-timeframe analysis, right? So first thing, everything is going to start with the supply and demand zone. This is actually a mind map that I just did for a new YouTube video that I'm doing on my channel. I'm editing it. Editing is the bane of my existence. It takes me forever, but it is going to be here this week. So towards the end of the week, I will have a new YouTube video out. Like doing these lives, it is easier, especially when I have like other people to bounce ideas off of. Okay, so starting with multi-timeframe analysis. So weekly chart, find tops and bottoms of obvious large movement. So what do I mean by that? Well, if you look at Topstep, let's look at the daily chart. Actually, let's look at a weekly chart because it's easier. So with large movements, so top, bottom, large move away, top, large move away, bottom, large move away, right? So not this sort of thing. Not just kind of moves, then it kind of doesn't move, and then it doesn't really go far, and then it falls back in, then chop, 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 chop. So not that, right? It needs to be a clean move away from the area. Not just going, are we going? We're not going. Are we going? No, we're not sure. Are we? So you need to see decisive movement away from these areas. Clean candles, right? Anything before that is just chop. Not interested. You can like look at it on a granular level and go, well, this is, if we're looking at this consolidation area, well, that's the top, that's the bottom, and then aim to get involved in that. And that's exactly what we were doing. I actually did really well, October, November, December, January. And then we kind of started to do these weird sort of movements, but in small ranges. So it's sort of going up, but it's like one day up, one day down, one day up, one day down, all in a very, very tight range. And this is the weekly chart, pretty painful. So once you've done that analysis of tops and bottoms, you want to repeat that same process on the daily chart. Rinse and repeat. Let's say displacement. So highs and lows with strong displacement. And then you might even want to do the same thing for a 4-hour chart. Okay? These are just mind maps. They're not like proper decision trees or anything like that. Now, once you get into the day time frame, that's where things usually become murky for a lot of people. And to do the intraday analysis, this is where profile to me was very, very helpful, because I was a swing trader and I was a pretty damn good swing trader. But then I really sucked for about a year doing intraday until I learned how to apply profile. And even the basics of profile were very, very helpful to me. Things like the first hour of trading, so initial balance, and the value area. So where are we opening? So the open sentiment is what I call where we're opening in relation to the previous day's value. Above or below, and how far out, very important, or inside. Open sentiment. So you can have above, below, and how far. Now, if you're only close to the value area, that opens up a possibility for the market to go and accept value. But you have to be somewhere close by. If you're very far away from value, it's very unlikely to even have a gap fill. So that's something that I look at. And you can have inside day. So above, below, and how far. So that's the first step, right? So that's how I break it down. Now, once I have that, you then have additional reference of the initial balance on the day, right? So you then have initial balance range. And that has its own subtext and subset of things. If the initial balance is too large, you are probably looking at some sort of a release like CPI, PPI, news, whatever, very violent move. It's kind of unlikely that you're going to have another big move that comes after that. And this is why I like to compare the size of the initial balance to the either average daily range, but in my method, I use average session range, which only looks at regular trading hours. So I call that the ASR. You've heard Coach Ray talk about it. He learned it from me. And you've now heard Ho talk about it. He also heard it from me. So that is my concept. It's literally a twist on the ADR, but just looking at regular trading hours. For those who are wondering, I actually do have a little trademark on that. So, yeah. So initial balance range gives us yet another orientation point to get oriented, and for lack of a better word, about what sort of a day do we have. So you can have the extension to one side, and there's again, a whole subset of things. You can have a day type that only extends a little bit. You can have a day type that extends the initial balance for the whole size of the initial balance that has its name. You can have the day where we extend both sides of the initial balance, and all of that carries its own implication of what you should be doing and when. So initial balance range provides yet another piece of contextual data for setups. So something like failed auctions. If you're on an inside day like we are on crude oil, I would expect a neutral day. So extensions on both sides. And that gives you trade locations. You can get a failed auction. Well, your trade location should be somewhere after the failure of the auction, somewhere around the initial balance edge. So whatever edge failed, that's your entry. So now you're not doing other things and going, using EMAs and stuff. You can use EMAs, you can use VWAP, you can use everything, but use another confluence that is based on market generated information in real time. Failed auction is a real time event, right? When it fails the auction, it's obvious. It fails the auction and starts spending time inside the initial balance. That's generally not a successful auction. And then when you finally get the close inside the initial balance, that it failed the auction. There's no... And sure, you can have it re-exit the auction, but usually that means it's already built structure. That's not a strong auction at that particular time of the day. And then you can take more decisions if we do crawl back outside of the initial balance. So all of that is let's call it a backbone of finding out what the hell we have going on that particular day. Anything else that you add after this, you can have VWAP for orientation. I use a timing tool on 1 minute and 9 EMA for certain setups, especially if we have a neutral day. I'm trying to snipe it after a stop run, after a liquidity grab. Through those previous established session high and lows, I will use the 1 minute 9 EMA and equi-volume candles on Ninja. So, there are things that you can always do to improve your entries. But for the most part, if I'm just looking at a regular setup that doesn't involve sniping things, it's not a neutral day, I will wait for at least a 15-minute bar to be closed before I decide what to do with it. And sometimes if a move is not playable, I will stay out of it. That's okay too, right? Not every failed auction will be playable. Not every neutral day will be playable, right? Sometimes you can have a neutral day with very tiny ranges. And then you're like, well, I don't even have, 30 ticks to play around with. Like, what's going on? Those are usually kind of post-holiday days or holiday days. Let's face it. Some people come to trade for holiday days. It's like, why? Right, let's have a look at some more questions. So yeah, hopefully this explains some of the process that I personally find very helpful. Again, this is not a signals class. I'm not saying, yeah, definitely do this. But this is something that I've personally taught to many traders, and it works for them. But it has to be more systematic. It has to be... This part has to be systematic, right? Whatever you do with your entries, that can be discretionary to a degree. But finding levels, it has to be something that you can repeat day in, day out without too much thought. So you have to practice to the point where this is no longer an issue. And your energy pathways and your neural networks have connected enough so that you can do this analysis on the fly pretty quickly. But beware that if you've never done this, if you've never started from a weekly chart and then go to the daily and then 4 hour and then value area and then it's an information overload. At first, it would be very difficult. I've had people who have never done it. They try to do it, and they spend 3 hours trying to figure out what is the high. And I'm like, well, just don't overcomplicate it. Do you see a high? Yeah, mark that. So this is where a coach. I see Coach Jay is in the room. Welcome. Very good to see you here. So, this is where a coach can help you, right? To kind of try and get good coach, not any coach, right? And we have a lot of good coaches here, excellent coaches at Topstep. Not just like random people that you've kind of found on the internet and go, hey, pay me like 20 grand. And then I will coach you the very basics and I will tell you what a candlestick pattern is, which is what you find with most people. And why the state of education in this industry is still in a bit of a pitiful state with people like Lambo Rule and the likes. So stay away from those types of characters and, come to Topstep where we have genuine coaches who are there to help you. And we now even have the VIP experience. We have teams, we have, some awesome stuff happening there. That was a very inspired move by MP. So, again, Patak is a visionary and he continues to come up with great ideas of how to push things forward in the industry. And, it's rare to see, especially from a prop firm owner. So we need to be very thankful for Michael Patak because he's doing things in a completely different way. And in the end, they were the ones, he was the one who started this whole industry. So, he continues to innovate. So, All right, so let's have a look. Dee, I have a weird question. How would you trade if you needed the money? I wouldn't trade. Probably better off to go on like Feed Finder or something. Honestly, guys, if you need the money, just don't do it. Because you're not going to make good trading decisions. And I know because I've done it once. So what happened was that I only had trading as my source of income. I decided to stop gigging. And then I had an unexpected tax bill that just came out of nowhere. In the UK, people tell you, a lot of accountants tell you that trading, spread betting is free because they're spread betting accounts. And that's what I was doing. And I thought it was free. Guess what? If it's not free, if you don't have another job that brings you, a regular amount of money and you do multiple trades per week, then HMRC wants his cut. So, and it wasn't great because it totally messed with my, it was a lot of cash as well. So suddenly I went from having a cushy sort of massive amount of savings, and I paid it off the mortgage, a whole bunch of other things. And then I thought, we have a ton of savings. This is great. And then the bill came and we literally had nothing. So I was like, okay, thank you, tax man, for making me poor. So all of the 3 months that ensued, I kept thinking like that. I wasn't thinking this. I was thinking, how am I going to pay the bills? Oh my God, I need a good month. Oh my God. Like, you can't trade like that, right? So what I actually did, I went out and I actually found another job. I actually went to do IT recruitment for a year because I also had something else happen. My very good friend unfortunately passed away from cancer, and it was like just a whole bunch of things that was happening. So it wasn't a good time. But if you need money, honestly, just don't trade. You are not going to get rich overnight. Okay, this is not what this is about. And if you come to trade with the idea that I'm going to whack in even a 5-lot trade and I'm going to make, 60 grand in one day, and that's going to be my saving grace. It won't. It will be your ruin, because that's never worked for anybody anywhere. So if you need money, I am joking about, OnlyFans, Feed Finder and all that. But, just go out and find a job that pays you 9 to 5 sort of thing. Or, do painting houses. I learned how to paint houses because I wanted to do property development. But that's actually a very useful skill. You can find jobs very quickly. You can get some cash in your pocket and you can kind of start over. But if you need the money, do not trade. Don't trade with scared money. It will never work. Okay? Huge sort of, what do you call it? The triangle danger sign. So yeah, go find a day job is what I would say. Nod Narb says, what time is a good time to catch a move on NQ or ES in London? Very rare. That would be an oddity. That would be an anomaly. So there is no time to catch an NQ or ES move during London. So yeah, that's a little bit difficult. Let's go back to Topstep here. Primarily because those are out of hours for those instruments, and a lot of the days it will be super quiet, right? So let's have a look at NQ. I mean, look at this. This is just barcoding, right? Tight range. Not really that far from VWAP. Building structure inside a larger volume profile area, high volume node. So we're just distributing here. There's nothing to see here, So there's no good time. The only time that equities start to move is during the overlap. That was one of my dogs, sorry. So during the overlap, there tends to be more movement. As the volume kind of picks up, as America starts to wake up and they're like, okay, let's start putting our pre-market positions on and all that, that's when the movement starts. But for London, early part of the London, if you see a very big movement in NQ or ES, that's going to be a part of some sort of a geopolitical piece of news or risk event or something that happened overnight, and the markets are just simply reacting to it. It is not the norm. All right, do you use GEX? I personally don't, but I do know people who do use it. Obviously, Nick for a tick. So Anne-Marie uses gamma levels quite heavily too for great success. And actually, whenever I'm on with her, we're looking for trades, looking for the gamma levels, even in crude oil. They tend to be pretty accurate because then we match it up with what I can see on the market profile and the overall supply and demand, and it becomes magical. But I personally don't look at them. I personally don't, because again, I'm not a core equities trader. That's more relevant for equities, even though you might be able to find some value in it for crude oil too, because there are options on crude oil. Will Sorto says, is there a Topstep indicator for daily and weekly highs and lows? Yes, it's on Topstep levels. So if you go into indicators and you go into Topstep daily levels. The weekly levels, I'm not sure whether we have weekly levels. Yeah, so here we go. Weekly, last week's low. And last week's high should be somewhere here as well. Here we go. Last week's high, yesterday's high, yesterday's value high. Now these will get updated later on. I think JD does them and he's not awake yet, obviously. Last week's low, weekly kickoff high. These are Hoag's levels. So it is there. So you just need to go into indicators, search for Topstep levels, and then you will be able to put them on your chart. All right, final question. Hello, Dee, where can I find some information about the failed auction? What is it and how to spot it? I teach it to quite some detail, the way I like to use it in my my pro development program. But you can probably find some information about it on YouTube. I've done some of the bits and pieces to try and not overwhelm people who come to my YouTube channel. So have a look at my YouTube channel. I do talk about it. There are market profile related videos that you might want to have a look at. But basically the failed auction is when you have the initial balance and then the market tries to go outside of it, so extends outside of the initial balance and then closes a 30-minute time frame that pumped outside back into it. Now sometimes you can have one time frame closing outside, but then the very next one closing back inside. That's also a failed auction, and it has to be contextual. I don't like doing failed auctions away from other levels. So if we're up in the air, we have nothing to fall back on. I don't like it, and usually I find those types of failed auctions are not as reliable, right? But the failed auctions that arise from another level, typically from average daily range or from the touch of value area after a gap fill related to the value area. So all of that brings more statistical relevance into the failed auction, and that's what I teach, right? So I don't necessarily teach, like I've moved away from quite a lot of, or I've evolved concepts that Dalton introduced, and then I've just kind of tested the things that worked for me, and for crude oil and gold specifically, and then modified some of the other things that maybe didn't work as well for me, and I decided to let go of the stuff that definitely didn't work for me. The profile concepts were created a long time ago. Obviously, the markets back then were very different than we have the markets today. The markets 5 years ago were different. The markets 3 years ago were different than what we have today. So that always you will always have a need to forever tweak things. But I've gotten to a point where I think we've tweaked the method enough with the help of students who have done the method before, and they have given us a lot of feedback on it. So over the last sort of 5 years that we've been around, we've reached a point where most of the questions are answered, and you can find out the nitty-gritty of each setup as you go slowly through the course. But it's not for everyone because it's such a, it's a big commitment and effort. It's not something that you can just fly through in a weekend. There's over like 30 hours of lectures in there. And especially when you take in I have a little kind of trading archive to illustrate the moves and the setup. So that adds even more to the whole learning process. But yeah, so failed auctions, I think Hoag and I have explained it many times, but the core of it is to have a move that goes out, that breaks the initial balance to one side. So it goes outside of that first hour trading range and then comes back into it to close a 30-minute candle back inside it. Clearly, there can be problems with it, because if it closes too deep inside of it, that's an unplayable failed auction. So sometimes you have to front run the failed auction, sort of guessing that they will happen based on tape reading, based on other confluences that we have. So it's not as simple on a lot of the times to just say, we're looking for a close of 30 minutes and that's a failed auction, because you have to be mindful of your profit margin inside the initial balance as well. Because it's not, like, it can be a momentum trade, but the stopping point statistically for that sort of a trade is the other side of the initial balance, not all the way through it, all the way past it. No, just the rotation through the initial balance, and sometimes that rotation is also partial rotation. It doesn't go all the way. So again, context has to be taken into consideration. That's where the skill comes in. So you have the setup. Now it's up to you to try and make it work. So use the visual mind maps and try to see how many times you get the failed auction. You know, forward testing is what it's all about in trading. You can watch as many videos as you want, but it's going to do nothing for your skills. It's kind of like trying to learn how to swim by watching a whole bunch of YouTube videos. It ain't going to work, right? All right, guys, I'm going to finish it here. Hopefully you didn't manage to get any good trades, unfortunately, so nothing really obvious set up. But that's the name of the game, patience. You know, we have inventories later. We have a whole bunch of craziness. We have FOMC minutes, which is not the rate decision. It's just the minutes, so they will probably be just repeating whatever we heard before. And I will go and have some time away from the screens, go do something else, maybe have more coffee, and then I will be back for fast markets. Now, don't forget, we have 6 days of broadcasting now. So we have Nick Fortick kicking things off for us at 4:45 p.m. Central for the Globex Open. Then we have Dakota every evening. I think it's Sunday to Thursday, I believe. And he does his slow markets at 7:30 p.m. Then we have London Open, 3:30 a.m. Central. Then we have the main broadcast, right? So let's see if I've forgotten anything. Okay, so we have At the Buzzer with Coach Jay, of course. That is a new addition to the market. So every day, 3:15 p.m. Central. I think we were talking about changing times, but for now, that's remaining 3:15 p.m. And we have Topstep Discord. If you like what we're doing and you want to interact with the Topstep community even more, check out our Discord. So let's see if I can drop the link. It's kicked me out. So give me a chance. Sorry, guys, it kicked me out of the document. Here. Interesting. Okay, so I'm going to drop a link as soon as I can. Today, maybe. And then we're going to finish it up for real. Okay, it's not loading. We're not going to be dropping a link today. But Bruno, if you can find a Topstep Discord link, that would be awesome. So yeah, I'm struggling a bit here with the Google Docs. So yeah, that is it. So I'm, like I said, thank you for watching. Make sure to click the like. If you're not subscribed already and you randomly stumbled onto this Topstep channel, make sure to subscribe. We have a lot of stuff all day long, 6 days a week. Thank you for watching. I will see you later for Fast Markets. Goodbye.